Hello distinction students, this is your commerce tutor Miss Zulu. Welcome to today's commerce session where we're going to look at the branches of insurance. But before I get into that, remember to subscribe to my YouTube channel for more sessions. So, the first type of insurance that we're going to look at is life assurance. So, the term assurance refers to the certainties, the term insurance refers to the probabilities, that is risks that may or may not happen, such as fire, theft, accident, and flood. Assurance is looked at as a form of saving plan rather than insurance. It is a true, we all know that we are going to die, but we are not sure when we will die, right? Okay, so let us look at the types of life assurance policies. Okay, so the first one is whole life policy. So when you talk about whole life policy, this is a policy under which a person assures her life or his life for a certain sum of money which will be paid to the dependents after he dies. Okay, so the next one that we're going to look at is a term policy. So when you talk about a term policy, this is a policy which covers a person for a fixed period of time. Okay, so let's say this term policy, when you talk about the whole life, is when your entire life, and then when you die, the dependents are the ones that are going to benefit. Okay, and then when you talk about a term, this one is based on the amount of period that you assured for. Okay, so let's say this one is way cheaper because even if you're still alive and you only assured for, let's say, 20 years, and then you pass that 20 years, that means it has expired. It won't go more than that because it's a term. It has a specific period of time. Okay, and then let's look at the endowment policy. So this policy is assured. It covers also a certain period of time as well. Okay, so let us go on and look at fire insurance. So fire insurance is a risk that has caused untold misery or mankind. Fire insurance covers the following. So we're going to look at two types. The first one is the ordinary fire insurance. So when I'm talking about the ordinary fire insurance, this one provides an insurance protection to a wide range of properties. Okay, so when you talk about properties, we're talking about personal properties, we're talking about business properties, we're talking about buildings. Okay, so when you talk about this ordinary one, it covers all those. It covers personal, it covers business, and buildings, and so on and so forth that are caused by what? The fire. Let us talk about consequential loss insurance. So when you talk about this consequential loss insurance, this is the loss of profit suffered as a result of uninsured risks. So for example, I would say a retailer. Let me say there's a person who has a retail shop, right? So in case they lose their properties or they lose their profit, this is when they get this insurance, the consequences of what the fire caused. Okay, all right, let us look at the factors considered when fixing the premium for the insurance, this fire insurance. So the number of people wishing to insure. So when you want to go on fixing this fire insurance, you need to know the number of people that are wishing to insure, so that as to apply to the law of big numbers. Types of cover required. You need to know which type of cover is required. Is it an ordinary? Is it a consequential? You need to know. Age of the person or the object. Purpose for which the object is used for. Value of the object. Number of people using the object, and security guardians fixed to the object. Okay, so you need to consider all those. Okay, so next we're going to look at accident insurance. Okay, so this branch of insurance covers a wide range of insurance policies, and including the following. So the first one that we're going to look at is motor vehicle insurance. So when you talk about the motor vehicle insurance, this one is compulsory by law for a motor vehicle owner to have this insurance. Okay, I'm sure we know, like every car has a motor vehicle insurance. Okay, so that one is compulsory by law. Okay, so now we look at the third party motor vehicle insurance. So the third party motor vehicle insurance is the minimum motor insurance any vehicle that moves on the road is required to have. Okay, So when we talk about this one, the third party provides compensation only to the third party's death. Okay. We look at the third party fire and theft motor insurance. So when we talk about the third party fire and theft insurance, so this one, the third party for the death or the body, or let me say if the third party dies or they have injuries, so this is what is done. So for example, if there's an accident, the motor vehicle had been damaged, or the driver has an injury, or the car has been lost due to fire, or maybe the car has been stolen. Okay. Let us now look at full comprehensive. So this one covers a variety of risks that may happen to a vehicle. So let me say if something happens, and this one is quite expensive compared to the other types of motor vehicle insurance. Okay, so this one mostly happens to those cars that are a bit expensive. Okay, let us look at the factors considered when fixing the premium for motor vehicle insurance. Okay, so the first one, we have experience of the number of accidents. We have the experience of the number of accidents. We have the number of people wishing to insure against these risks. Okay, and we also have the type of motor insurance required. So you need to know which type of insurance you're getting for your motor vehicle. Okay, the purpose of which the vehicle is used. What is the purpose of that vehicle? Is it a family car? Is it a public vehicle? Okay, because when you talk about the purpose, we have high premiums. When you talk about high premiums, these ones are like sports cars. They are charged more than, they have more pay compared to those family cars. Okay, so we also talk about the value of the car, the number of people using the car, and lastly, we talk about occupation of the user. So when we talk about the occupation of the user, we have high premiums, low premiums. So when you talk about, for example, let's say a teacher, for example, a teacher driver who have less, they'll have a low premium compared to a salesperson who always travels around cross borders. Okay, and then now let us look at the other types of insurance that we have. So we have employees liability insurance. So when you talk about employees liability insurance, this is a class of accident insurance which provides compensation of employees for deaths, diseases which they suffered whilst they are working. Okay, we talk about public liability insurance. When you talk about public liability insurance covers business owners and manufacturers against claims by member of the public for deaths. For example, I would say accidents that are caused by maybe, we can talk about public buses, we can talk about, yeah, that's an example I can give. So let us look at fidelity guarantee. When you talk about fidelity guarantee, it provides to employing for money or goods stolen by employees. For example, I would say there's an accountant in a company, right? And then that accountant runs away with the money. Okay, so let us talk about credit insurance. When you talk about credit insurance, it provides cover to traders for losses resulting from bad debts. Let's say somebody had bad debts and then they lose their money. This is when the credit insurance comes in. Okay, let us talk about theft insurance. So when you talk about theft insurance, it provides compensation to insured persons whose goods have been stolen, whether from home or from a business. Okay, let us talk about air travel insurance. So air travel insurance provides compensations to insured person who suffered deaths or injuries caused by air accidents. Okay, let us look at marine insurance. So marine insurance covers losses or damage to property and life caused by sea risks. The main types of marine insurance are, we have cargo insurance. So when you talk about this cargo insurance, it covers importers and exporters for loss or damage to goods being transported by sea transport to various parts of the world. Okay, then we also have ship owners liability insurance. This class of insurance covers ship owners against claims that may be made against them. We have deaths or injuries. Okay, we also have freight insurance. So this is a sum of money paid to the shop owners whose shop was hired for the transportation of goods. And lastly, we have seller's interest insurance. So when you talk about seller's interest insurance, this is where goods are sent to a buyer, right? In a foreign country, okay? So when those goods are sent to a buyer in that foreign country, and then the buyer refuses to accept delivery of those goods, this is when the sales interest insurance comes in, okay? Let us look at marine policies, okay? So when you talk about this one, we have several types. So types of marine policy insurance, we have voyage policy. This type of marine policy is taken out for the particular journey. So for example, we'll talk about maybe if you're traveling from Dar es Salaam to New York or USA, okay? So cargo insurance is usually taken, okay, on this type of policy. Okay, so when you talk about time policy, this is a marine insurance that is taken for a particular period of time to cover the hired. So this one has a specific period of time. Let's say we talk about 6 months, okay? And then the last one is a mixed policy. So mixed policy requires that a sum of money agreed upon between the person seeking insurance cover and the insurer is deposited with under risks so that each time a ship makes a journey. Okay, so lastly, we'll talk about the marine laws. So marine laws may be classified as, we have these four classified types. The first one we'll talk about is the particular average. So this one refers to any form of cause or injuries that may be suffered whilst the ship or goods are in transition. The type of marine loss we're going to talk about is general average. So this one is a loss suffered as the result of sacrificing some properties in order to save the entire ship, okay? Then the other one we're going to look at is actual total loss. So when you talk about the actual total loss, this one occurs when the entire goods and ships are completely destroyed beyond repair, okay? Then lastly, we're going to look at constructive total loss. So this one occurs when the ship or goods destroyed are capable of being retrieved or repaired. Okay, so thank you for watching my video, and make sure you subscribe to my YouTube channel for more sessions.